Let's take a look at some charts on Cardano for Brave New Coin. So Cardano recently transitioned from a 100% centralized network to a partially decentralized network and functioning proof of stake. It has an extensive roadmap and has always had an extensive roadmap. I encourage any ADA maximalist or interested parties to go check out the roadmap. There's a lot of moving parts here, what they're doing, when, why. If I saw this on any other project, I'd love it. Cardano has had a history, much like IOTA, Zcash, and any other related coin of developers, specifically the developer at the top, who loves to be combative against people for whatever reason. So that automatically puts a bad taste in my mouth for the project. Now, I'm not a personal fan of this project. I think it's a bunch of gobbledygook, but who am I to say? I'm just a guy. That's just my opinion. Let's look at the data. So on March 3rd, they talked about the process of going to full decentralization, which essentially at the underlying core means that IOHK or people who IOHK support aren't the sole bodies determining the legitimacy of the transactions, the legitimacy of the nodes. They had an illustration a while back discussing their migration. So they're somewhere between these two stages on their way to this stage where they eventually go to full decentralization. Up until this point, or prior to this point, they certainly were not decentralized in any shape, form, manner. That's really not a debate. So I applaud them for this transition. It appears as though it's working. It appears as though the network isn't crumbling upon itself in the process, which is good. And that's always a risk for something like ETH, for example, which is going through this process as well. From proof of work to proof of stake, ADA had to rework some stuff with Byron, and they continue to rework some stuff. They're definitely active in the development department. They're one of the most actively developed coins. You can't knock them for that. Is a mere mortal like myself going to be able to understand most or all of what's going on under the hood there? No. If we look at the pools, currently 71% of the active supply, I believe, is being staked right now. There are 2,250 pools, and you can look at them all on adapools.org. Very similar to Tezos or any staking coin where there's various incentives or fees for one pool versus the other. Now, ideally, I haven't checked into these specifically, but ideally these are decentralized geographically. They are decentralized between exchanges, non-exchanges, universities, individuals. You have a diverse group of nodes determining decentralization, determining governance, that sort of thing. If we look at on-chain metrics for the token ADA, we had a massive run-up in transaction counts, which sort of followed DeFi-related activity. I don't know how or why ADA may have gotten lumped into that. Any coin worth their salt in marketing is going to attempt to glom onto any active narrative in crypto, whether it be NFTs, whether it be DeFi, whether it be ICOs, whether it be decentralized exchanges. All of this stuff are they're buzzwords for people like moth to a flame. They see this, they're like, oh, DeFi is doing well, ADA is going to do well. There were some rumors of some Chinese pump and dump scammer farmers. I don't know what's going on there, but nonetheless, it correlated very well with the rest of DeFi, so that's interesting. Transaction counts went way up. This was, of course, post proof of stake transition, which was at the end of last year, so they're definitely benefiting from that transition on the on-chain metric side of things. The new normal is going to be the rest of this year and beyond as far as what to look for in transactions, because this is likely including a lot of proof of stake related transaction activity, just like Tezos. It's the same thing. I mean, I look at those transactions on chain, I look at those active addresses on chain. Everything looks amazing, but the price chart looks nonplussed, unaffected. So transactions way up and falling considerably here, which is sort of a theme on the rest of this video. Active addresses rose way up as well, falling as well. down from a high of around 100,000 to 75,000, so about 25%, which for ADA is a massive increase. Again, a lot of that is likely proof of stake related and speculative activity related. NVT continues to decline. NVT is an inverse metric of economic utility. This is going to be highly influenced by proof of stake rewards or proof of stake activity, sort of non-economic activity, if you will, non-organic utility. Utility that's sort of auto-baked in to the rewards and how that works. That's going to adjust NVT to the downside. So it's hard to know how much of any of this to believe. It's not ADA's fault, it's just the transition from whatever it used to be to proof of stake. It's gonna need to be time to adjust how to read the stuff on chain. If we look at the Google trends for Cardano worldwide since 2017, massive rise, massive spike in Google trends that is declining considerably or predicted to be declining considerably over the next week. So I hope you're sensing a theme here. Here's the USD chart, which effectively hit an all-time high at $1, busted through the R5. Yearly pivots, busted through every resistance imaginable on the upside. Maybe this was DeFi related, DeFi adjacent, maybe. I think when you ask 10 people on the street who are in the ecosystem if they consider ADA DeFi, I think 8 of them will say no. So I'm not really sure what's going on there, but my guess is this got lumped in with DeFi, which is why since January it exploded along with everything else. This did have a slight bearish divergence here. It was subtle and not necessarily something I would have picked up on in the moment, but it's a tough buy up here because it's past the R5 already early in the year. It historically has been unable to maintain highs. Really, other than July, where it reconsolidated, it doesn't have a history of holding any higher highs for an extended period of time. The 200-day moving average is basically 50 cents, so I could see a 50% drop here pretty easily. It's very far away from the 200, so the mean reversion potential is high. And looking at the previous mean reversion, which was basically end of last year, October, November, December, that's where I want to buy this in a vacuum. Up here, where it's hit like an RSI all-time high or multi-year high, there's no volume support here. There's certainly yearly pivots to support this, but there's really no EMA support until the 200-day moving average. The previous sort of local high also at around 40, 50 cents up there as well. Other than that, not a lot of history at this level, so it's hard to think that this is a buy and hold here for me if I was trading this because of how overbought it is over the past 3 months. For me, it's a much better risk-off play to rebuy the 200-day moving average than to rebuy anything or hold anything up here. Here's the cloud. The cloud told you to get in mid-December, and this is why you trade every cloud signal as if it's going to be an insanely profitable signal. You can see you had a bit of a long trade here that got closed on this cross here, a relong here, hasn't closed yet as far as to the bearish side, hasn't closed below the cloud, hasn't even closed below the Kijun, but again, I don't hold a lot of water to this price up here. Once the dollar level goes or is tested and fails, I expect 80 cents, and once that fails, I expect anything to the downside just because of the relative price action on the way up. Anytime there's no consolidation, you're going to see this start to crumble quickly, the Eiffel Tower type situation. And I'm not just saying all this because I dislike ADA as a project. I'm just being real here with the downside potential. So if you're playing this in a vacuum based on the cloud alone, you're rebuying or you're adding to your position at around 90 cents, and you're definitely out of everything by 80 cents if it drops below the cloud. If we look at the 4-hour on the USD chart, I really don't like this rounded top situation, this potential messy head and shoulders type declining volume, declining RSI situation. The 4-hour 5200 cross is set for a bearish cross here, so we're just continuing to add to the notches of bearishness here for ADA. And then lastly on the BTC chart, this is the ultimate this is the nightmare chart, right? Because you're super bullish, you get in, you do your thing, you let's say you open at the cross, the 5200 cross, right? You're holding, and then in a week, it retraces basically 50% of the move almost instantly. So massive Eiffel Tower there. This is going to scare a lot of people who are holding from the top, or late longers especially. What this represents is people who got in a big way towards the top and were not prepared for the downside, or over leveraged, any of those sort of things. Again, the 200-day moving average is all the way down here at 1200 sats. VPVR all the way down sub 1400 sats. Just tons of downside potential still here based on EMAs. If this can go sideways, regroup, figure itself out, fine. I just wouldn't expect this to just shoot back up to previous highs. This could be setting up for a massive head and shoulders here. You'd have to zoom in a little bit, but shoulder, head, some shoulder at like 2100 sats, and then a retrace all the way back down to 1200 sats. So overall, yes, they are developing at rapid speed, rapid pace, and continue to do so for many years to come. They are transitioning to proof of stake, 100% fully decentralized network. The transaction counts and active addresses are still high relative to where ADA has lived historically. They have violently declined, however, which gives me great pause if I was holding this, or anything that looks like this, where transactions per day are declining rapidly, active addresses are declining rapidly. There needs to be a new normal figured out by the market as far as what's going on. Maybe the biggest concern really overall is Google Trends declining rapidly, because usually this represents new money entering the system. So if new money isn't coming in, or if new money is scared to come in, then that's going to affect price in a big way. I think the USD pair is primed for at least a 50% retracement. I think the BTC pair is also primed for a large retracement as well. I think overall the moves are done. In the meantime, they need to consolidate and wait, or retrace significantly, or let the moving averages catch up, all of which for me means I'm sitting out of ADA trades in the meantime. Let me know what you think in the comments below, and happy trading.